This computer, there we go. Hi everyone, thank you for coming along today. You're here at the first time buyer event, hosted by ESPC. I'll just introduce myself and everyone. So my name is Will. I work in the marketing team at ESPC. We've got Claire Flynn from the ESPC, who is the content editor and senior PR and public affairs executive. I've got Peter McGregor, who is in the mortgages team, and we've got Caitlin Keegan, and she's from Gillespie McAndrew, and she is a senior solicitor there. The purpose of today is we're going to be talking first-time buyers, which is the name of the event. So we'll be starting off with a market update from Claire, just telling you what's been happening recently in the market. We're then going to move on to a pre-submitted Q&A session. So these are any questions you guys, when you signed up, you asked, we'll be answering them. And then after that, we're going to have a live Q&A. So the live Q&A, you'll notice you've got a Q&A box. You can submit questions. We do have a chat box as well, but I would recommend using the Q&A box, and anything that comes into your mind, just submit it there. We'll try and get to all of them. We're going to have 45 minutes today. So we should have 20 to 25 minutes for the questions, the pre-submitted ones, and then any extra time we'll use for the live questions there. So we'll just go straight into it. So I'll pass across to Claire now, and she's going to give you a market update.
Thanks, Will. So I'm just going to talk through a few of our sort of key statistics from the last few months for Edinburgh, Lothians, Fife and the Borders. You can find all these in our latest house price report as well, which is available at espc.com in the news section, and we publish those reports at the start of every month. So quite useful to have a read if you are keeping track on how the property market is doing. From August to October, we've seen that the property market has remained exceptionally busy for this time of year, with a lot of activity from buyers and sellers. We've seen real surges in activity since the restrictions were eased at the end of June, and that has pretty much continued. We saw a little bit of cooling in some activities in October, but generally still much higher levels than this time last year. And we also saw in Edinburgh, Lothians, Fife and the Borders that the average selling price over the last 3 months rose by about 8% compared to last year. But bearing in mind that that is applicable to all property types across all these areas, so quite a significant size area there, and it varies dependent on different areas. For example, in the Scottish Borders specifically, average selling price actually rose by about 20%, and then in Edinburgh, the average selling price rose by about 6%. And then across all areas, the Edinburgh, Lothians, Fife and the Borders, the average percentage of home report valuation achieved during the last few months was 104.1%, and that's compared to 103% last year. Again, this varies when you look at individual property types in different areas. So, for example, 1-bedroom flats in Leith Walk, Easter Road, Pilrig and Bonington, which I guess we would kind of consider to be more typical sort of first-time buyer properties. Some of you might have considered buying flats in that area. And they actually achieved an average home report valuation between August and October of about 109.4%. The reason that figure is important is that for any of you that are currently bidding on properties or budgeting even just for your first home, when you get a mortgage, and I think Peter will probably go into this later in more detail in the Q&A, the lender will lend you the amount based on either the purchase price or the home report valuation, whichever is lower. So if you choose to bid over the home report valuation in order to secure a property, whether that's 5 or 10% over, that's money that you'll need to budget for in addition to your deposit as well. So it's just worth being aware of some of these extra figures that, and again, as I say, it varies from different property types and areas. So that's where it's really useful to speak to both a mortgage advisor and a solicitor to find out kind of what you can expect for different areas, and making sure to factor that into your budget as well. Over the last 3 months, we've also seen slightly shorter selling times for properties in Edinburgh, Lothians, Fife and the Borders. So the median time for properties to be placed under offer was 18 days, which is 3 days faster than last year. So that's less than 3 weeks. So again, quite a short time. I would say the above statistics that I've told you point to generally quite a competitive market, point to a more sellers market, but I would actually say that we have seen some really good things for first-time buyers as well, namely that the number of properties coming to market over the last 3 months has surged a lot higher than last year. So the number of new listings was up 44.4% over the last 3 months compared to last year. And that is good news for you guys because it means more choice of properties on the market. So that's quite a so that I think that's just a good news for first-time buyers there. So those are just some of the key statistics to kind of set the scene of what's been happening in the market recently. And I know we have loads of questions to get through, so I'll pass back to Will so he can start the Q&A part of the event.
Perfect. Thank you very much, Claire. I think that's the biggest stat that stuck out to me there was the 20% increase in the borders. That's a huge jump, but that probably does reflect people's kind of changing wants and needs. Okay, so we'll go straight into the Q&A. So the first few questions are for Peter. I think mortgages is obviously first-time buyers. It's a very, very, very important part of it. So I'll just start with the first one. Could I use my ISA account for my golden share / help to buy deposit? What are the pros and cons of golden share / help to buy properties?
Okay, so really 2 questions here. To answer the first question, the ISA fund, ISA funds or ISA funds, help to buy ISAs, yes, absolutely. These can be used as deposits pretty much on any purchase that you're making. Second part of the question, which was the pros and cons of golden share help to buy properties. Both are shared equity schemes. I'll just touch on the golden share one first of all. That's a scheme run through Edinburgh Council. There are a couple of things that you need to be aware of with golden share scheme. First is that you need to have a link to Edinburgh, the District of Edinburgh, Council of Edinburgh. That can be through family, through work, or because you live in the area. That's the first thing. The second thing with golden share, the kind of probably the best thing if you are interested in this scheme would be to look at the golden share page on ESPC.com. But the sort of basics of it are you can buy a property at 80% of its true value. So and these are specific properties as offered by developers. But the price is restricted, or it's capped at 80% of the actual value. But in order for you to be able to buy it, you have to go through a couple of hurdles. Now, these hurdles are, as I say, first of all, you have to demonstrate that you have a link to Edinburgh. And the second thing, you have to demonstrate that you wouldn't be able to buy the property if it were valued at 100% of its original price, if that kind of makes sense. It's a good scheme because it gets you onto the housing ladder. The disadvantage of that particular scheme, though, is when you come to sell it again, you're only going to be able to sell it for 80% of the value at that time. So you can't sell it for the true value or the 100% value. And again, when you come to sell it, the person that buys it from you also has to qualify for the scheme in terms that they wouldn't be able to afford 100% of that property, and in terms that they have to have a link to Edinburgh. So it's a kind of very restricted market. Shared equity on its own, standalone shared equity. If we talk about the First Home Fund, where Scottish Government will contribute towards the purchase price of the property. Great way to get on the housing ladder. Very good way to get a start up. The advantage is that you're getting some assistance towards your deposit, and so it's enabling you to purchase a property and sort of overcoming that big deposit barrier that we have currently. Disadvantages, you have to pay it back at some point, I'm afraid, and you pay back the relative amount in regard to the proportionate share that has been contributed to. And what I mean by that is, if Scottish Government have contributed 10% towards the valuation purchase price of the property, your onward repayment back to the Scottish Government will be 10% of the future value of that property. But both very good schemes. Yep.
Thank you very much. So the next one is, do we have a chance to get a mortgage if my partner is still on furlough?
So the furlough scheme has just been reintroduced again, and I'm led to believe it's going on until March next year. And this is, I've got to be honest with you, this changes daily as far as lenders are concerned. The question, that specific question, sounds as if it sounds from a couple. So if one person's earning and the other one's on furlough, then there may be possibilities. I will be honest though, it's quite tight to get a mortgage at the moment if you just got one income and that's a furloughed income. But it's rapidly changing all the time with lenders. We daily get emails from all the main lenders. Criteria just changes as the COVID situation changes and as government policy changes. So the answer is not a no and it's not a yes. It's a speak to a broker, to be honest with you.
Thank you very much. So the next one, can I buy any property through the First Home Fund? I think you've kind of already answered that, but you...
Yeah, any property, as long as it's, first of all, it has to be a residential property, it has to be your first time purchase, and it has to be something that a lender would lend on. So it's fitting all these criteria, then pretty much, yeah, new build, old build, second hand, yes. But it has to be habitable, no lender's going to lend to you if it's not habitable. So if you're thinking of buying a doer-upper and making your first £1 million on that, that's not going to happen, because it has to be ready to move in before the lenders will lend to you. But otherwise, yeah, pretty much most properties.
Thank you. So next question is for Caitlin. When would be the best time to enter the market in the current conditions? As soon as possible, or wait till the end of the stamp duty holiday?
Okay, thanks, Will. That's actually quite a good question to pose at the minute. Particularly, you know, when you think how things have changed recently, I would say, you know, this time last year, all aspects of the market were moving quite well. And then obviously we'd shut down and things sort of really slowed. Since we've come out of the first shutdown restrictions, the market has been incredibly busy, and there's been a lot of movement in it. And I think people have maybe reassessed what they want in terms of a property. And a lot of people want to move out of Edinburgh. You know, some people want to move further out of the city centre to get a bit of a garden. You know, I think lifestyle choices have changed slightly. So it very much depends on what you want. I would say in the market at the moment, houses with gardens or flats with gardens a wee bit further out are moving potentially quicker than say, city centre flats. So my advice would be if you know you very much still want to stay around town and you're quite willing to buy a flat and you're looking to buy a flat, I think it's actually quite a good time at the minute to have a look and see what's out there. You know, as Claire said, there's a big surge of properties that have come onto the market. So it is actually slightly even more a buyer's market at the moment. And a lot of these flats that have come onto the market, quite a number of them will be where the sellers have already had an onwards offer accepted on a purchase and they're keen to sell. So, you know, potentially if you do your homework, there's a wee bit of it, maybe, you know, you could maybe do a bit of a deal. You know, I'm not saying there's fantastic deals to be had in Edinburgh. We know it's quite an expensive city to live in and prices do increase. But I think depending on what you're looking for, I think it would be still a good time. There's a flux of properties onto the market. A lot of people start to think, okay, well, I'll not look just now, I'll look the other side of Christmas. So as I say, you know, it is a wee bit more of a buyer's market in that respect. And I think that there's opportunities for first-time buyers within the market at the moment.
Perfect. Thank you very much. So next one is back to Peter. What are the best banks to approach for a mortgage in terms of LTV and interest rates for first-time buyers?
So just going back to what I was saying a few minutes ago there, everything changes on a daily basis. Banks change according to the business levels, according to the staffing levels, and according to the loan book. And what I mean by that is the amount of money they've got to lend. Because of that, there is no that's the best bank, and it's all down to individual lending policy and individual circumstances. Unfortunately, there's no off-the-shelf mortgage that's going to fit every first-time buyer because everybody's different. Your income's different, your debts are different, the size of your deposit's different, the type of property, the area, everything's different. So lender A may be the best deal for you, Will, and lender B may be the best deal for Claire, and lender C would be the best deal for Caitlin. There's none of them are going to be the same. So there is no answer to that other than speak to a professional, get them to analyse your situation, and then arrange the best deal for you every time.
Cool. Thank you very much. So again, another one for Peter. How do guarantor mortgages work, and if they are a good option, and are they a good option if you have a willing guarantor?
So guarantor mortgages, nowadays, guarantor mortgages have kind of changed a bit from where they were before. Nowadays, any lenders that are lending guarantor mortgages are generally speaking looking for professionals. And what I mean by that is somebody who's just come out of university, for instance, a trainee solicitor, a trainee doctor, a trainee accountant, where their income may be relatively low, whilst they're going through the probationary periods, whilst they're training, and within a few years they will accelerate quite highly up once they're fully qualified. That's pretty much what guarantor mortgages are aimed at, or that's the kind of market really. And they are the the borrower would be supported by the parent's income effectively. So it would be like a joint mortgage. What is now came more to the fore and is kind of gradually replacing guarantor mortgages is what we call a joint borrower single purchaser mortgage. And this is where there would be two applicants on the mortgage. So it would be the first time buyer, say, and mum and or dad on the mortgage. They would apply together. Mum and dad's income would be taken into account, as would be their debts, and the age that they have to retirement. So the term until they retire would also be taken into account. So it's not always the best answer, because sometimes that term, if mum and dad are in their 50s and they've only got 10, 15 years left to work, it could be a shorter term mortgage, which means that monthly repayments are higher. But they do work. They are there to assist those that are on a low income, and they are worth looking at. Again, everyone's individual circumstances are different, so I'll speaking to a professional about that.
Thank you very much. So next one is for Caitlin. This is a forecasting question, which I've seen a few come into the Q&A box as well, which we'll get to. So looking for expectations on how the property market might develop from March 2021 onwards, specifically price and demand for 3 or 4 bedroom houses with a garden in the city centre.
That's a difficult question because I don't have a crystal ball. If I did, I'd be very rich. It's difficult. Obviously, the market is really buoyant at the moment, but as I say, it's tended towards that buyer's market. What it's difficult to predict is where we go with COVID, where we go with this pandemic. Are we going to be in this for another year? Will there be further restrictions? It's a bit of an unknown at the moment, I'm afraid. I've always found in Edinburgh itself, prices tend to just increase steadily, and they do so quite well. And they tend to hold their value, relatively well. So, I couldn't possibly see a massive drop in prices, but it's unknown. Where do we go with COVID? Economically as well, the implications there will no doubt have an effect on the property market. So I'm afraid it's a wee bit of an unknown at the moment.
Perfect, thank you. Okay, so the next one, I think I had it for Caitlin, but I think it's actually more of a mortgage question. So is it possible to buy a home before a Tier 2 visa is issued due to the pandemic? I can start my job immediately after my visa application is submitted. Can I apply for a mortgage and buy a home before the visa is issued?
Again, it's down to individual circumstances. I think probably the theme of most of my answers here are everyone's circumstances are different, and because everyone's circumstances are different, there is no block answer to that. The specific Tier 2 question, it may be possible, and that's dependent on the type of occupation, a level of deposit, level of income. There's a lot of different factors have to come into the mix here. So the honest answer is may, and I wouldn't know without actually having a lot more information, to be honest with you. But as I say, everyone's circumstances mortgage-wise are different, and you should really seek that professional advice to know exactly where you stand.
Thank you. So next one is for Caitlin. What are your top tips for first-time buyers? I think this question was originally top 10 tips, but I don't want to give you too much. But no, yeah, so just top tips in general for first-time buyers.
Perfect. Okay. I think for first-time buyers, it's obviously a bit more of a daunting experience because it's the first time you're doing it. You kind of feel like you're fumbling about in the dark a wee bit. But what you need to keep in mind is, there are people to help you. That's why you get an independent mortgage broker like Peter. That's why you appoint a solicitor like myself. We're there to guide you and to help you through the process. So my first top tip would be, be organized. Yes, you can look at ESPC. Yes, you can go out and view as many houses or flats as you like, but without all of the support in place, it's very difficult to move forward. So what I would suggest at the start of your search, think about how you're going to save your deposit. Where is it coming from? If you're going to get a Help to Buy ISA, get it opened, get going with the savings there. If mum and dad are going to give you money, make sure that they're aware that, they'll need to have those funds in place, so if it's coming from a remortgage of their property, if it's something they could do sooner rather than later, getting that funding into place. Then speaking to someone like Peter, assessing what you can actually afford. You need, for mortgages are very much, and Peter obviously knows much better than me, they're very much down to your individual circumstances and your affordability. So you need to be very aware of what you can afford and what sort of budget you're looking at and what sort of level of price you should be looking at. The other thing is then obviously speak to a solicitor, get a solicitor appointed. And most firms like myself, we're very much bound by like anti-money laundering legislation these days. So we need to have ID in place. We need to know evidence of your source of funding, you know, so rather than going out and looking at properties first and then phoning a solicitor and saying, I have a closing date tomorrow, can you offer? Try and get ahead of the curve. It saves you stress. It saves, you know, your solicitor running around trying to do things. If you've just completely organised, appoint your solicitor, give them the ID, give them what they need, have a bit of the chat with them. Because obviously, you know, when I speak to my clients, particularly my first time buyers, we talk about areas, we talk about, you know, what things are selling for in the area. As a member solicitor, I have access to the ESPC archives. I can see recent sales. And, you know, I do this day in, day out. It's my job. So I'm able to help you with a bit of advice and what I think things would go for and help you get realistic expectations so you don't, you know, suffer disappointment. So it's getting all of that into place and establishing that relationship with your solicitor where you can phone them up and say, I've seen this property, what do you think? And having that chat, get all of those bits and pieces organized so that when you do see that, you know, the dream flat, the dream home, then you can move quite quickly because the market does move quickly. And if a property is popular, you know, you're ending up in a competitive situation. So you want to be organized to be in the best possible position to move as quickly as you can.
Perfect. Thank you very much. So the next one, again, I think this might be another mortgage one. What does it mean when the reinstatement evaluation for insurance purposes and the evaluation of market differ?
So I think that question specifically relates to the home reports. Contained within all the home reports, there's usually always a mortgage valuation report or mortgage report. And at the bottom of that, it has two prices. One, it will say the value of the property is £200,000 or whatever that figure is, and it will then say insurance reinstatement, and that could be say 250 or 150. The reason why there's a discrepancy is because the insurance reinstatement value is how much the valuer thinks it would cost to reinstate the building should it fall down, burn down, get hit by a runaway truck, that type of thing. And that cost isn't reflected in the value because that cost, that reinstatement figure is relative to getting an architect to come along, redo the plans, get a builder to come clear the site, get couple of brickies, all that type of stuff. So the rebuild cost is going to be different from the valuation, and it can sometimes be higher, sometimes it can be lower. But it should be, the two figures obviously should be confused, but that's why you always see a difference between the two.
Perfect. Thank you very much. One for Peter. What is the minimum salary that you suggest is possible to get a mortgage when a reasonably substantial deposit is available? Now, I think I know you're going to say here, but
yes. You have to have. At the end of the day, everyone has to have enough to live on. You know, so your bread and butter, your gas, your heating, your light, transport, clothing, food, entertainment. You need to budget for all of that. Whatever else you've got left on top, that's really what you need for your mortgage. Clearly, the more money you have, the more you can potentially borrow. But equally, the bigger deposit you have, then the better property you can buy. As I say, there is no hard and fast minimum. For instance, if you earn £20,000 a year, but you have an addiction to keeping horses or something like that, you have an expensive hobby where you're spending £5 or £6 a year looking after your horses, having them stabled, then clearly that's going to have an impact. As opposed to if you earn £20,000 a year and you just sat at home every night reading books, you've clearly got a lot more disposable income. So it's a question really of assessing the disposable income that you have to ascertain what you can borrow comfortably so that you can continue your life in the manner. But you know the answer.
Perfect. Thank you very much. What are the current requirements for deposits? Our lenders expecting larger amounts of 15% and up. So I think this is the 15%, 10%.
So again, if you think back to the crash that we had about 12 years ago, after that, lenders withdrew all the smaller deposit mortgages, and that's kind of where we are at the moment. The reason for that is because things are a little bit unstable with the COVID. Some lenders will lend at 95%. So if you have a 5% deposit, there are maybe 1 or 2 lenders out there that may consider you. There are a few that would do at 90% or with a 10% deposit. And most lenders, and the majority of lenders, are now looking for you to have a 15% deposit. It's important to remember that that deposit is the deposit of the valuation. As Claire pointed out earlier, the lenders are looking for you to have your percentage as a deposit of the value and not. So what I mean by that, a very quick example, if you buy a property at £150,000 and the lender's looking for 15% deposit and you're needing £22,500, that's that 15%. If you pay £160,000 for that property, you need your 22,500 plus that 10 grand over the valuation that you paid for it. So in actual fact, you're really contributing 32,500 there. But there is, again, individual circumstances will dictate what exact deposit you need.
Yep. Thank you very much. Okay, so another one for Caitlin. How long does the process take from putting an offer into a moving date, and is this sped up if it's a cash buy?
Okay, another good question because people always want to know about timescales. It's the market, I would say timescales have slowed slightly due to everyone working from home. You know, the world is working very differently than what it was. You know, previously we would have said to clients 68 weeks. What you have to appreciate is we're all working from home as our lenders. That, you know, it's, you know, they're a faceless organization, if you see what I mean, but they're all working from home too. So things are taking longer. And I think Peter would probably agree with me. We are saying at the moment to clients 8 to 10 weeks is more of a realistic time scale. If you're getting first home fund, they have very rigid timescales. They have very set things that when they need things and how long it'll take from the date of getting need things. So for me, first home fund, I would say 10 to 12 weeks, just to give yourself a wee bit of time. What you also need to remember is whilst the date of entry is really important to you, it's also important to the seller of any property you're purchasing. They might have an onwards purchase where they need to agree a date on their purchase. So it becomes a bit of a negotiation up and down the chain. But it's something that's workable. But I would say at the moment, probably around 10 weeks, I would have thought.
If I can just add to that, actually, lenders are actually taking a long time to get things processed, and there's a number of factors for that. It's all COVID related, but effectively, the lenders, we've had a post-lockdown surge, so there's a lot of activity going on, a lot of buyers. The lenders have been deluged with all these mortgage applications, and they don't have any staff in their offices. They're all working from home, and they're all working very slowly from home. So the whole mortgage process is elongated and taking a fair bit of time to get a mortgage offer issued.
Perfect. And then the last question from the pre-submitted ones. How much money do you need to save on top of a deposit for other potential costs? So I'm assuming this is LBTT and stuff.
So again, another good question. You're going to have your land and buildings transaction tax, which for first-time buyers, there isn't any up to the until you pay more than 175, and currently I don't think there's any until the spring on purchases up to 250. Right. So your land and buildings transaction tax, that effectively used to be called stamp duty, and it's a tax that you pay when you buy a property. So it's a bit like VAT, but you pay it on a property. It's called LBTT. On top of that, you've got your legal fees. Very important to get good legal advice. Caitlin, I'm sure will agree. Lenders sometimes charge fees, so sometimes you can they'll charge a fee to get a specific product or a specific mortgage rate. Your mortgage broker will be able to look into whether that's worth doing or not. And with most lender fees, these can usually be added onto the loan for a small increase in the monthly repayments. Broker fees, ESPC mortgages, we charge £295 for first-time buyers. I like to think it's the best money you're spending the whole process. But we do work hard for our money, and you can look at our Google reviews and that hopefully back us up on that one. Sorry, the last thing as well is if you are paying more than the value of the property. So in addition, as we've already highlighted, in addition to the deposit the bank's looking for, anything you pay with valuation, you need that as well. So a very quick summary are your legal fees, your broker fees, any lender's fees, though they can be added to the loan, land and buildings transaction tax, and any amount that you pay with valuation in addition to your deposit.
Cool. Thank you very much. So we're going to go into the questions you guys have been answering along the way. I think the first one, Peter, you did kind of answer. It's if not already answered. If a property is valued at 150k and I offer 165, would I get a mortgage for 150 plus 15k deposit, or would I get a mortgage for 135 plus 15k deposit plus 15k extra of my own money? Now it does depend on the mortgage, right? That's how much you're lending. How much you can lend, sorry.
Yeah. So just to recap that bit again, then your deposit is going to be based. Your deposit is based on the valuation of the property. So if you're looking for a 5, 10, or 15% deposit, it's that amount of the valuation. If you pay above the valuation, you need that in addition to that percentage the lender's looking for from you.
Thank you. Do you believe prices will start stabilizing or potentially drop once the LBBT holiday ends and Help to Buy restarts on 1st of 4th, 2021? How do you believe that the end of the furlough scheme will influence the future market for first-time buyers? Caitlin?
Again, it's a big crystal ball scenario. It's hard to say. It's hard to say. We didn't expect furlough to sort of go on, beyond the end of October. It has. It really just depends how long we're in this strange and wonderful situation we find ourselves in. And I suppose when furlough does end, how do the government recoup that money? Presumably will tax rise potentially? Will it have an effect because people can't afford as much? Potentially, yes. But, I think because things are so uncertain in the world at the moment, it's hard to predict how it will go. But if, yes, taxes are increased or, furlough ends and there's no more assistance, it will undoubtedly affect the market. But without knowing how that's going to go, I'm afraid.
Yeah. Because there's a lot of factors here, like the vaccine. How effective is that when it comes out? Does that then kind of restart the economy?
Exactly.
There's a lot of factors here, and would love to be able to tell you, you want to start buying on.
It's difficult. And I suppose at the moment, because we have, shut down, we have certain level of restrictions, like, you can't go out on a Friday night for dinner. So you're saving some money. So people are at home, they're saving a bit more money and actually thinking, well, actually we're maybe in a better position than what we were to move. And you want to then obviously get the best deal. But I suppose without really knowing, with all these other factors going on around the pandemic, it's difficult to tell, I'm afraid.
Thank you very much. Another one for Peter. My partner is still on probation. It's a new job. Will that affect the mortgage we can get? I think you've kind of touched on that.
That's a good question. That one, actually, to be fair, because there are different types of probation. And what I mean by that, you could have a probationary teacher. A probationary teacher is a 1-year contract, effectively, or you could have someone who's just joined a new job and they're going through the probationary period, but it's a permanent contract. Depends on the lender, depends on the individual circumstances. Again, no two individuals are the same. But yes, it is possible. The short answer is yes, it is possible to get a mortgage on probation, depending on the type of probation and all the other factors that come into that.
Cool. Thank you. I think we've talked about the furlough one already, so I'm going to go through it there. Again, with the 10% mortgages one, I think it will be a lot clearer next year what's happening if we're going to have them available. So and we'll be hosting these events into next year as well. So if you are interested, definitely keep an eye on our newsletter and stuff, because we'll be talking about that in January and February, and we'll have probably a clearer idea. In fact, one question just coming now: what impact will Brexit have on the market? I mean, it's something else to consider. I don't think we could say, we wouldn't be being honest if we said, it's going to do X, Y, and Z. So I think these kind of questions, we will have a better idea, and we'll be able to, and the good work that Claire does when she looks at all the stats and all the figures, when we get into January and February, we'll be able to kind of show you kind of what's happening in the market. So that's that one there. So we've just got one more. We are at the state to set up a plan of how much we need to save to be able to buy and what kind of mortgage we'll be able to get. Is it a good time to contact a mortgage advisor to help us create a plan, or should we seek from somebody else, such as a financial advisor?
It's a no-brainer. Sorry. Just to quickly explain the difference, a financial advisor tends to deal in pensions and investments. A mortgage advisor specialises in mortgages. That's all we do. We don't dabble in anything else. We concentrate on mortgages. wherever you are in the planning process, if you want to be a first-time buyer, speak to a mortgage advisor first, and always do that before you even contact your solicitor, before you start, as Caitlin said earlier, before you even start looking at properties, because you need to know what you can afford and what you need to do to help you to get there. Every time, mortgage advisor first.
Well, thank you very much. I think that's all the questions we've got. I'll just say thank you to Caitlin, Peter, and Claire. That was really good. Thank you to everyone who attended today. We are going to be, if you did come in late, I noticed we had a few people come in late. We are going to be putting this on YouTube, so you can go back and watch it all. And the next event we're having is a buy-to-let one, so maybe a slightly different market to what you guys are looking at the moment. But we will in January kind of be having a slightly bigger event, just with a kind of a kickoff to the year, and we'll be talking about kind of the what we expect to be seen from that year. So hopefully we may have our crystal balls by then. We don't know, but no, I'll just say thanks again, guys. That was great, and thank you for attending.